The port city of Dalian is a major hub for imported soybeans arrival on Chinese soil. A 25% tariff is now enforced on American soybean as China retaliates to U.S. escalation of trade tensions between the two countries. And ports here in Dalian have been seeing changes to where China's annual demand of some 100 million tons of imported soybean comes from.
In
the long term, it is necessary for China to reduce its reliance on American soybeans. The country has already made adjustments to expand its import channels.
Professor Li Yan specializes in trade and global value chain. She says U.S. soybeans now account for about 1/3 of China's total demand for imported soybeans, only half of the level seen in 2014. In addition, import volume from Brazil has increased in recent months, breaking a record high in May and jumping over 10% year-on-year in June. In the meantime, China has waived taxes on soybean imports from neighbors such as India and South Korea. All of these efforts aim to reduce the effects of higher tariffs on American soybeans.
If we only look at soybeans, the impact on Chinese companies is relatively smaller than on the American soybean industry.
Agricultural analyst Wang Xiaohui is an external counsel to the Dalian Commodity Exchange. She says domestic soybean futures have returned to fundamental levels, and soybean prices will not rise too swiftly in China this year. Nevertheless, she pointed out that the trade conflict has forced the Chinese firms to spend ample time finding replacement sources for American soybeans. And now, U.S. soybean farmers may face gaping losses via the Chinese market. Xu Xingchen, CGTN, Dalian, Liaoning Province.